Which TSX blue chip stocks should you buy for stable returns? Due to the ongoing war between Russia and Ukraine, the world economy has been impacted negatively, and the war is expected to have long-term impacts on economic growth. And since the start of this year, equities markets have remained volatile, and it is becoming difficult for investors to get higher yields on investments. Amid increased volatility in the market, stocks with the potential to provide stable returns could be considered for an investment portfolio. Please keep watching to find out more. Subscribe to the channel. Sage here for Kalkinemedia. On that note, let's take a closer look at 3 blue chip Toronto Stock Exchange stocks in Canada that could provide stable returns to investors. The first one on the list is a Canadian National Railway company on the TSX as CNR. Canadian National Railway has a massive rail network across Canada and the United States. It is one of the largest companies in Canada and has a market capitalisation of approximately Canadian $109.8 billion. In the fourth quarter of 2021, Canadian National delivered strong financial returns and recorded revenues of $3,753 million Canadian dollars by surging 3% year over year. The operating income increased 11% year over year to Canadian $1,566 million in the fourth quarter of 2021. And meanwhile, the diluted earnings per share jumped to $1.69 Canadian, up 18% year over year. Its share price traded at the price of $156.87 Canadian on April 27th. Next on the list we have Canadian Pacific Railway Limited on the TSX as CP. Canadian Pacific achieved a milestone in the fourth quarter of 2021 by creating the first single-line rail network connecting Canada, the United States and Mexico by acquiring Kansas City Southern. In the fourth quarter of 2021, the Canadian Pacific's revenue increased 1% from the fourth quarter of 2020 to reach 2.04 billion Canadian dollars. And meanwhile, it registered a growth of 4% year over year for the full year. The CP stock distributes dividends regularly. Its shares were trading at $93.06 Canadian on the 27th of April. The last one on this list is Loblaw Companies Limited on the TSX as L. Loblaw is one of the largest grocery, general merchandise and pharmacy retailers in Canada, and its stock was priced at $116 Canadian dollars and 6 cents per share on the 27th of April. And Loblaw is expanding, and last month it announced to acquire Lifemark Health Group to expand its healthcare services. As the COVID-19 pandemic continues, expanding healthcare services could benefit the retailer in the future. In the fourth quarter of the fiscal year 2021, Loblaw's revenue increased by $349 million Canadian dollars to reach $12,757 million Canadian dollars. And with that being said, it's important to note that investment in a particular stock should not be done without deliberation and thought, since the market is a volatile space and keeps on changing. Thanks for joining us on this report. If you do like the information, let us know by liking, sharing, commenting on the video below, and subscribe to the channel. Do press the bell icon to be notified of the latest videos from Kalkine. For more articles, head to the website kalkinemedia.com. My name is Sage for Kalkinemedia.